Warwick is going to be joining us now on the Exploration Funding panel. So if you have any questions based on his presentation, feel free to ask him now. We're on the panel. Also like to welcome our two other participants. We have from Lowell Resources Fund out of Melbourne, their CIO, John Forwood. And we have Jim Copland, who is the Executive Director at Small Caps at IFM Investors, based here in Sydney. So, gentlemen, if you'd like to take the stage, can I have a quick round of applause for our panellists? Welcome. Before we get going, does anyone have any quick questions for Warwick based on his presentation there? Any things that spring to mind? If not, no? Paul?
Well, it's an allied question. So, with MiFID, brokers, bigger brokers are covering it.
So with MiFID, bigger brokers are covering less of the smaller cap companies, and so it's probably harder now. My observation is it's harder for smaller companies to get research coverage, harder to get the story out there. Do you think, in the companies that you talk to, that corporate sponsored research, where companies pay for it to get the story out? I mean, I've always found that most companies are reluctant to kind of go down that route, but my sense is that ultimately this will have to be an avenue, because brokers, as you mentioned, can't get paid for secondary commissions, or there's not enough money in small cap stocks. What do you think the solution is for the smaller companies to getting a voice into the market?
There's two main routes they use now. One, social media and hype and basically rubbish running around. It's very hard to get quality research written because the number of analysts are dying because of the way ASIC treats research. Once upon a time, an analyst could go out and interview the company and get a greater depth of understanding and write confidently. Now it's much harder to get those secret briefings. There's no real money in writing research anymore. There are so many restrictions. You will have a number of analysts in the industry. You know, I'm one of those who've had a career, got a reputation. If they're prepared to put their name to something, then that counts for something. But research with brokers is more about advertising and putting the name up there. Brokers are very scared to put any recommendations down. So it is a problem communicating. And it's only going to get worse, and that increases the volatility and the lack of knowledge in the marketplace, and you know, it is a problem. What I prefer to do in my research is never have a buy or a sell recommendation. I look at a stock, whether it's a detailed report or just a one-pager. I try and characterise the company, make sure that the reader understands what they're dealing with, and keep it fairly simple. There's so much information out there now that research is not so much about giving facts, because you can get it on any website. It's really about dealing with trusted people whom the industry values their judgment. Everyone's got a view, they won't all agree, but that's what it's going along the path of now. And interestingly, in paying for research, I don't charge my research. I'd rather use it as due diligence, and after I publish that research, I'd rather invest a couple of $100,000 in the company and make money that way, because I make more money and getting paid for it. It's of more value to the company. So I try and take a very commercial approach, and you know, ASIC still gives me a hard time because they say I'm not allowed to call myself independent. They've legislated that word out of the dictionary, which is just crazy. They just don't understand what they're regulating.
John, where do you get your research from? This is an interesting topic to start things off. On the smaller companies, obviously less well covered by the big brokers and banks. How do you find out?
Yeah, look, I think the mid-tier brokers, if you like, still do some good research, but you're right that a lot of it is focused on, you know, the bigger companies, you know, the Regises and the Northern Stars and that sort of thing. So really, you know, I use that to try and extrapolate down to the smaller companies that don't have that coverage. I know, Warwick, you do cover the tiddlers, and that's great, but there's so many, there's 700 tiddlers, and you definitely can't cover them all. So it's very patchy, and there is a big gap in the market. There's no question.
And Jim, how about you?
Yeah, I agree with both the panellists. One of the things that's happening with the sell side being hollowed out, because people aren't paying for good research, is that the quality of the numbers that goes into the consensus estimates out there is getting diminished. Increasingly, at the same time, there are more quant investors in the market, so you're getting more money coming in, trading off numbers that are less reliable, and that's causing increasing volatility in the market. So for active investors like us, that does create opportunity, but it also creates a huge amount of headaches when you're looking at something, not understanding why it's going up or down. So that's one of the things I've noticed that's come out as a consequence of all of this change in the market with brokers, etc. But we, first and foremost, where we get our information from is meeting with the companies in forums like this. But at the same time, we are aware of what those numbers are out there, so that we can, hopefully, tailor our approach according to what the quants are also doing at the same time.
And ask the companies, obviously, those questions. Do your figures actually stack up, and why the quants got different figures for you, and that sort of thing?
Yeah, absolutely. And just from a bottom-up kind of view, understand the asset, understand the management behind the asset, the strategy. And everything that Warwick mentioned about fundraising, unfortunately, it's a mercenary kind of environment that we operate in, and you do have to raise money, and there's all sorts of different people involved in that process, and that's just you just have to get that done, and that's an important skill set too.
Fantastic. Yeah, John.
Sorry, just going to add, Jim, I think that's a really important point that because of that quant trading almost becoming more and more prevalent. You can't quant an exploration company, and that is a reason why funding has been drying up for the real junior exploration sector.
Absolutely. You receive these sort of AI generated sort of updates on companies where it says this company has no revenues. This company has a cash burn. It can't be a real company. It gives you this negative picture of this company. It's obviously got no revenue. It's drilling holes in the ground, but anyway, so it doesn't really work. Anyway, we're here to talk about exploration funding and meeting the need to finance new discoveries. I think we start off, it'd be interesting to hear a little bit just about your two funds and just what you're focusing on at the moment, what your appetite is for the exploration space. So, John, if you want to start off with Lowell Resources Fund. Yeah,
so we're an active manager, like Jim. We are focused on the junior sector. And by number, I would say about 20 to 25% of our investments are in what I call grassroots. That's companies that don't yet have a resource of any form. So yeah, we definitely have an appetite for that. We're looking for the 10-bagger plus a multiple on our money, and that's where you can find it. But our appetite is generally in terms of value invested or dollars invested is lesser. The further back up, or further down the risk curve you go, we'll be putting less money in. Where there's a prospect, there's a twinkle in the geologist's eye. If we like the geologist and we like the idea, we might put some money in, but it'll be sort of a tenth of what we might put into something that's more advanced.
And your investors, what are they asking you for at the moment? Are they saying put more into the exploration end, or are they saying be a bit more risk off at the moment?
Look, I think they probably are risk off. It's interesting for us. We're pretty heavily we're overweight gold at the moment, and that's an interesting sector because when things go risk on, that probably means that the gold is less attractive, but it means that other junior companies are more attractive, and vice versa. So we've got a little bit of an internal self-balancing portfolio, if you like, and perhaps that's what investors in our fund are looking for.
Absolutely. And Jim, tell us a little bit about IFM and what your focus is on.
Yeah, thank you, Leah. I'm based in Sydney. We've got a small cap fund which has got a capacity of around $1 billion, and as a consequence of the size of that fund, and sorry, I should add, the benchmark is the Small Ordinaries Index. we're always going to be, give or take, whatever the component of that index in resources, that's where we're going to be. So if it's 25% of the index, we'll be about that. Even in the good times, when it's more, we'll match that. And the point there is a lot of our competitors don't invest in resources necessarily, and they get a free kick on when the market's going down, with a fair bit of alpha coming out of just not being there. But we'll always try and deliver the alpha while being there, trying to pick the better names. And this is a bit of a smallish session, so a bit therapeutic for me. We had a micro cap fund as well. It got taken off us by an investor. I'll share that with everyone. Similar kind of approach. We were always going to have some resources in it, 20-25%. However, a couple of things. Our investor, which was an industry fund, is looking at going into passive investment. That is, these quant sort of strategies. The idea being that the passive guys charge lower fees. They get their beta, they get their market return, and they're happy with that. Whereas the microcap land, as everybody here knows, there's a lot of volatility. We can be outperforming by 20%, 1 month or 1 year, and then down 20% the next. And they're not necessarily, as much as they're long-term investors, comfortable with that kind of risk profile. So we lost that, and as a result of that, we don't get to dabble at the sort of the exploration end of the market anymore. Although I enjoy that part of the market the most. And that's where I say that this appetite for exploration investment is at the moment suffering because of these kind of decisions, and I understand why. There is money heading away from the active and particularly at the exploration end, but as Warwick said, and as you said, Leo, that will come back. But for now, it's tough.
Absolutely. And when you're looking at the exploration end, is there a particular sort of commodity that you like? I mean, John mentioned gold. It's a good contrarian sort of counter-cyclical play. Same sort of.
Gold is good from the capital perspective. It is capital intensive, but you don't need to build railways or worry about ports. And there are, we're pretty good at it in this country. When you get to things like nickel and copper, again, not as tough as the bulks, but nonetheless you do have to have off-takers, and there are other parts there. That said, the same skill set applies to gold exploration as it does to the others, with slight differences, but good explorers will find different metals. We'll be invested in wherever the commodity can, and the project can be that part of the cost curve in our estimate, that will be there through the cycle.
Absolutely. And Warwick, what keeps you at this end of the explorer's end of the market? Why don't you go off and just put all your money into Rio and put your feet up?
I'm always an optimist. The good thing about what I do is every day is a new day. You're turning over stones. I'm always looking for that pot of gold at the rainbow. I like helping genuine people try to build companies. Over the years I've helped fund a lot of operations and create a lot of jobs. I think that's socially useful. I actually do spend more time than most looking after little guys because someone's got to look after them. Sometimes they can get annoying, but they're all part of the market. I was a little guy once, and I might have done things better if I'd had a few more people give me good advice. I've learned in the school of hard knocks. But I do find markets more challenging. I find the regulator more difficult to deal with. I basically do it because I enjoy it. I enjoy markets. I enjoy the push and pull. It's, to me, I've been doing this since I was 12 years old. I went off and did law, and I was supposed to go into politics or be a lawyer or do something respectable, but I had more fun in the markets. And I love the field trips. I love guys who are actually really trying to build something.
Absolutely. And what do you think the regulators and the government should be doing in Australia to help promote the exploration sector? Australia's awash with resources, and the world is changing and providing new opportunities for new minerals, and
I think they should stand aside and just let us get on with our job, because they don't understand markets. They don't understand the social aspects of the markets. They want to de-risk it, but if you de-risk a market, you destroy it. So you're talking about public servants that have never held down a real job. They don't know what risk is. And it's hypocritical with the Section 708 provision where you're not allowed to invest unless you've got 2.5 million and you're 708 qualified. Well, that just means the little guys can't take the cheap placements that the wealthy guys get. And on a social level, you know, if you want to be radical, you could argue, well, this is designed to keep the poor poor because you can't have rich if there aren't any poor. So the quality of regulators, you know, the requirement for these guys should be that they've been in industry, that they know the way the real works, the way the real world works. You know, I had a period for 6 months where I was dealing with ASIC. They reckoned I didn't have enough disclosure, and I disagreed. I said, all right, well, I'll make the font bigger. And that's really all it was. They told me I couldn't use the description of my business as independent or objective because you're not allowed to use those words. But the most galling thing about dealing with ASIC was they wouldn't meet me. They wouldn't meet me in person. I said, well, let's just sit down and we'll have a chat, and I'm happy to do what you want. But just remember, you're only telling me what to do because I've got a license. You can take my license away and I'm still going to do it. So, and you know, but they would not meet me in person. I had a number of phone calls, but at all times there was someone in Perth, someone in Melbourne, and someone in Sydney on the telephone, conference call, cost taxpayers an enormous amount of money. But, you know, when they're gutless wonders and they won't sit across you face to face, you know, that's starting to look like Stasi to me.
Which is the best market then out there for explorers to raise money? Is the ASX, TSXV, AIM?
Australia's still the best if you're serious. AIM, they're so, well, more recently locked down by Brexit. I've never seen a market, we tried to do something on AIM a year ago, but I've never seen a group of investment professionals more intimidated by the regulator than AIM. They were basically useless. So, you know, we terminated that and raised the money here. In Canada, they all say it's all about cannabis and stuff like that. Now, cannabis goes hot and cold. It's more extreme. And when it's cold, it's freezing. Australia's got more of a reliable, regular market capability that goes up and down. And I think, even though what I've said about ASIC and ASX, it's still probably better than the other areas. So for juniors, this is the market that creates most opportunity.
How's it performed this year so far in terms of capital raisings?
Oh, it's been not easy. I think the short-termism that is increasingly taking over our markets makes it much tougher. You know, in the last couple of years, we'd have 2 or 3 months of excitement over cobalt or vanadium or something else, but there's no follow-through. Everyone's, you know, if it wasn't for gold performing so well this year, it would have been diabolical. But gold has been the effervescent commodity which has enabled a lot to happen. And Australia's just such a wonderful place for gold. It keeps on delivering. So, apart from that, everything else, it's been pretty selective.
Why do you think those things like cobalt and vanadium don't have a follow through?
Well, there's a fundamental reason. You know, when cobalt tripled in price, batteries are so sensitive to cost inputs. The battery manufacturers said, "Hey, hang on, we'll back off. We won't use cobalt if it does that." Same with vanadium. The people just don't understand the economics. A lot of people out there are running around saying they've got cobalt, but you know, same assays were coming out. Instead of having the copper grades first and then cobalt second, they switched it over. There's a lot of people trying to get on the bandwagon, and you know, it doesn't stack up.
Going forward, this is to all the panel, anyone wants to jump in here. What role do the producers, because Australian gold producers, for example, have had a cracking couple of years, awash with cash. To what extent should they need to be investing into the juniors, more M&A, more joint ventures to fund the next wave of discoveries?
Yeah, well, they're the obvious guys, to fund, junior exploration or exploration full stop. If you think about what the best characteristics of an investor in exploration are, it's one with, deep pockets, long-term perspective, and appetite for volatility, and preferably some technical knowledge, and they'll understand, the highs and lows of drilling programs, etc. So industry players tick all those boxes at the moment, in particular because they have got so much money. So that they are the obvious guys, and they are, they went through a period where they were taking placements in junior companies and funding them that way. More recently, they've been doing that through joint ventures, and we've seen some nice substantial joint venture, money go from these mid-tier, particularly the gold companies, into projects which the juniors have. In particular provinces like the Paterson province, Rio's been pretty active up there, and Newcrest and other companies. So there's hotspots. The Tanami, that's a bit of a hotspot for senior to mid-tier gold companies. So yeah, look, they play a role. They are playing a role, but I guess when you look at how much money they're sitting on and they're making, the amount of money that they're putting into exploration is fairly low. I just went and had a look at Kirkland Lake, and they're probably the most profitable gold producer on the planet. They're spending a lot of money on their, on drilling. I think they're doing maybe 200,000 metres in the last 12 months or something like that. But it's a drop in the ocean compared to what they're sitting on $600 million of cash. They're paying a very small dividend relative to their market cap of $12 billion. Yes, the surmise is that they're sitting there trying to do M&A. They're running around the world trying to find a ready-made project rather than trying to find a new one.
At the top of the last sort of boom, though, a lot of these companies came unstuck with sort of maybe ill-advised, M&As, and a lot of CEOs lost their heads, so to speak, due to investor pressure. Are they still running scared of the investors and saying, well, we don't want to be the one who makes the wrong M&A decision?
Yeah, the gold industry is rife with this. I actually think that the success of the Australian gold industry in the last sort of 5-10 years has been, people put it down to the Aussie dollar gold price being at record highs, and it is, and that's a great environment. But actually, the decisions that the teams today are making, I think, are better decisions than what they used to be. They're not doing those kind of dumb deals. The North American industry, they're the ones who really, I think, blew themselves up with some of those crazy deals that got done. And that's sort of reflected in the performance of those equities, all the way, the big boys all the way down. Whereas down here, and we have made plenty of mistakes, but I think the guys like Bill Beamans, Raleigh Finlaysons, these guys are miners through and through. They're cut from the same cloth as Warwick. They'd be here even if the price was half what it is, because that's what they do. And they're bringing a lot of discipline and a lot of passion and some learnings from the past. And I think that's, they're doing the exploration. They're going to Jundee, and instead of starving that asset of capital, they're doing a deep 2.4k drill drive underground to really, let's add a couple of million ounces here and get a 10+ year mine life instead of having a 1.5 year hand-to-mouth kind of existence. So they're doing some smart stuff. And I think they're avoiding those dumb deals. We'll never say never. There's always that opportunity, but so far so good.
Yeah, I think that's been one of the most pleasing aspects that I've seen over the last 30 or 40 years. These companies have been so disciplined. People like Cookie, he doesn't do everything perfectly, but his general philosophy is it's got to make money. We're not doing this just to pay investment bankers fees. They've been very disciplined and selective. And hopefully they continue that way, because the takeover route is fraught with risk and people always overpay. So it is pleasing to see the disciplines we're seeing now.
And as investors, you encourage companies to put money back into exploration and to M&A? I mean, David Baker yesterday talked about, you know, needing a third to keep the company running, a third to explore for new projects, and a third to give back to shareholders. Is that the sort of philosophy you would follow, or would you say, give me all the money?
I think David would say that, but he's been doing this for a long time, but I tend to agree in the sense of when you have that discussion around the board table, you know, we've got a certain amount allocated toward dividends, but it's competition for capital. What about exploration? You know, what about M&A? It's all, if you've got a view, it's competition for capital at the end of the day, and it's just going to make you quite disciplined about how you do things. I don't think there's a formula that you have to apply every year. I just think it's that discipline in the conversation that you have around use of that capital.
And I guess it depends on what resource you've got, what mine life you've got. If you've got a sort of 60-year mine life, you probably don't need to be doing too much exploration.
Yeah, there's always a problem when companies are run by lawyers or accountants who don't understand the life cycle of exploration and mining. We've seen that happen in the past, but hopefully with the companies we've got now, they've got a good balance of all of that, because they're very different cultures between exploration and mining. But you've got to reinvest in your business if you expect to have any longevity.
One question I'd like to raise is the role possibly that the government can play in supporting the exploration sector. Increasing resource nationalism around the world, China dominating the supply chains of so many critical metals, but again Australia, you know, with its resources has an opportunity to take a leading role there. What role do you think you'd like to see the Australian government taking to promote and maybe fund some early stage exploration?
Well, I think there's probably three current roles that the government's playing in exploration. One is the state government. I think pretty much all state governments have a drilling fund, which is usually $1 for $1, offsetting the direct drilling costs. Not necessarily big money, but you know, there's a few $1 million available in most states for that. Then there's the JMEI, the Junior Mineral Exploration Incentive Initiative, something like that, which is basically a tax rebate which is capped, and that's through the tax office. And then, which is a little bit removed, and it's quite topical, how much R&D how much you can squeeze your exploration into an R&D rebate, and there's a few things going through the courts at the moment on that. But there is those three that I'm aware of, three avenues of government direct dollar assistance in exploration.
Should they be doing more though? Warwick, you said you'd like the government to back off,
Yeah, I'm a great believer in free enterprise. The initiatives that they've given that John mentioned, they're useful, but I think on a broader level, they should actually be doing something to convince the community that everything starts with mining and it's essential. Shaping social values, making them realise mining is necessary, essential, and they're not just as bad as the protesters down at IMARC the other week were telling everyone. So I think that's what they can do. I think that quite topical now is they should get on and build more dams out in the country so there's enough water. They need to think a bit ahead, think where they want mining to go, think long-term infrastructure, and just reduce red tape, make it easier. Those more touchy-feely things that companies don't have time to deal with because they're too busy working.
And looking forward, you mentioned that there's obviously some reluctance to be too risk-on at the moment with the state of the world. But at what point do you think the supply side pressures encourage more people, cause the prices to rise and more people to come back into the exploration space? If we're timing this cycle.
Yeah, it depends on the commodity, of course. We saw the lithium space respond very, very quickly to the EV thematic, and the miners did a great job, too good a job in getting that supply ready to go. Gold, now's the time. It's a bit less about supply demand with gold. Nickel is another one where we're probably seeing oversupply again from the nickel laterites. There's been since 2005, there's been a shift in where the bulk of nickel units have come from, and that's gone from sulfides to this laterite product, and it's that's growing still. So it is specific to the commodity. Copper's an interesting one. I'm a bit more on the bullish camp in the sort of the three-year time frame view, and that the mines are getting deeper, they're getting lower grade, the strip ratios are going up, and I do think at some point there is going to be a bit of a supply challenge there, notwithstanding, and also the geopolitics in Chile and other places. So it just is very commodity specific. But I think equity funding has been lacking, and inevitably with China growing, with the world growing, continuing to consume commodities, there is going to be some deficit emerge, probably sooner than we're all expecting.
I think nickel's a great example. Just recently, in the last month, when Indonesia announced that they were, either going to ban exports tomorrow or next year, or flipped and flopped. But the nickel price spiked, substantially, and a number of placements were done in junior nickel companies. Explorers, bang, like that. So you do get a very quick response on the exploration side. It's obviously much slower, for that to then lead into a response in supply from mining.
Absolutely. Do we have any questions from the audience? A question at the back here.
Yeah.
Wait for the microphone. Go behind you.
Oh, thank you very much. Great presentation. Just from the point of view of grassroots exploration, what are the kind of things that, as investors, get you attracted to a junior? There's probably 1,000 of them on the ASX. Aside from, sentiment around a commodity or event-driven news like drilling, what are some of the things that make it where a board of a junior can make decisions that an investor thinks I want to be with these people?
The market tends to like big conceptual plays. The bigger the dream, the more possibility. It tends to create more interest, especially amongst larger investors. Basically, in the junior end, investors want to see exploration companies having a go. They want news flow because that's the lifeblood. They want success as well. But, we're not as keen on companies that are just raising money to pay directors' fees. Obviously, that ratio of money in the ground to administration is an important measure. The example I gave of Samantha and Samson, they ended up being very successful companies developing mines because they had a go. They managed their risk well. I think that that's what people are looking for.
But that's a good point about the big conceptual, players. We saw that with Pilbara Conglomerate Gold. What was that? Two years ago. The Canadians sort of drove that initially, but massive play. The comparison to the VITs in South Africa, etc. And share prices, really went crazy. What I would add, one thing that we are keen to see in terms of looking at junior explorers is skin in the game and commitment by a board or the management to the company. I mean, you can have the best managers in the world there at a particular company, but if they're not committed to it and things go bad, then they can walk away. So either it's a reputation risk or it's money invested by the key guys. That is very important to see companies through the tough times.
And I'd just add to, for example, just say you're a copper explorer, a small company, limited resources. Maybe the nature of the target, for example, don't try and drill out a giant copper gold porphyry, down to 1,000 metres, because you basically blow your budget on one drill hole. You probably need to have more maybe a high grade epithermal kind of opportunity. And then maybe there's a second stage or third stage of the company where a major might be interested to join forces down the track. But if you've got sort of a path to market, I suppose, through something that's doable, that your skill set's well matched for, that's certainly something which we can invest in, because we can sort of see the second and the third and the fourth stages.
Just picking up on that point, I think it's a fantastic one about a small company biting off what it can chew. The model that I really personally like is a joint venture with a bigger brother on big projects, a big project that's going to consume lots of dollars, but keeping a smaller, more doable exploration project 100% or majority control. Because if you don't have majority control of at least some of your projects, then the investors are investing in something where they're just possibly going to be contributing as a minority interest with no control over what happens. So there's a number of I mentioned the Paterson province. There's Antipa Minerals up there, joint venture with Rio on some of its ground and 100% on some of its ground. Lefroy down at Lake Lefroy, similar with Goldfields. Musgrave have just done a joint venture with Evolution, hard yards out on the Salt Lake, but they've kept 100% of the stuff that's on dry land. So that's a nice model. You've sort of got a bit of the best of both worlds, just picking up what Jim said.
And continuing on that topic, while we have a couple of minutes at the end here, any regions or even companies that you are sort of getting you excited at the moment? Looking at the year ahead, exploration companies or provinces that you think?
Well, Western Australia is still the go-to place for gold. They keep finding more and more. So as they get older, I actually like a bit less risk. That's my preferred area. I think in terms of places where I wouldn't be going, I'll be staying away from Burkina Faso at the moment. Having been there a number of times, good geology, but at least Australia's got more predictability from one decade to the next as to regulations and things like that. But around the world you can go to exotic places, but it's always a lot harder.
We had a company from Burkina Faso who didn't want to come to Hong Kong for our event because they thought it was too dangerous.
Just quickly, like Western Australia, look, we own Bellevue Gold in the fund. It's an older area, having a new look at, and we want to see a bit more than just inferred, but it's an interesting and intriguing kind of thing, and we do know a lot of success is had under the in the shadow of the head frame. Another area, Eastern Australia is regulatory-wise is hard work, I find, but interested in the success that Staveley has had in Victoria. That's I just feel like it is a little bit neglected for all the reasons that regulations that they have to contend with and all that kind of stuff. But for that reason, there may be a few extra opportunities that we're seeing. And goodness me, Kirkland Lakes is absolutely having a fantastic time at Fosterville. So there's a bit of opportunity on the east coast. At the moment, I think too.
Is it rude to ask at what point you got into Bellevue?
When we had the microcap fund, it was at just 19 cents, and then we had to sell it all on the way through. But we did actually put it in the small cap fund as well. So we're ahead, but most of the time we're not.
It went from market cap of about 13 to now it's about 300 and something million. So.
Yeah, it's been a few exploration raisings, but anyway, we'll wish them good luck.
I think that just exemplifies the point that making exploration discoveries in Australia, Bellevue, Penny West with Spectrum, Staveley in Victoria, you do get that very quick re-rating generally, which you might not get if you drill a similar hole in West Africa or somewhere like that. But one area where perhaps there's some good value, and we're seeing some of our miners migrate over there, is North America. Partly because the Canadian market is in the freezer at the moment, and the Canadians haven't got the money to pursue projects in their backyard. I was in Denver recently and met up with a consulting geologist who had a sort of small consulting team, and he said, "Oh look, I've got lots of work, doing lots of projects in North America, all of them with Australian clients. Like none of them, his base of clients were mainly in Canada, but none of them had any money." So we're seeing, for example, Northern Star go and buy Pogo, and St Barbara buy Atlantic, etc. But there's other, more junior companies like, White Rock and Polar X and those sort of guys who are getting into Alaska, where there does seem to be a lot of opportunity, and it's very, very hard yards, short exploration season, but some great mineralisation.
Do you think we're going to see more M&A going forward of the Australian sort of mid-tiers going and buying up some cheap assets in Canada, like Atlantic?
Yeah, I think while the the TSX venture market remains in the freezer, I think we'll continue to see Aussies with often with premium valued stock go and make acquisitions over there.
Do we have any final questions from the audience? Question over there.
Just a final point. I take it from what's been said this morning that the traditional exploration model is pretty well done in Australia. And I guess that was reiterated by the recent Deloitte study that came out that said that something like, was it 200 or 240 junior exploration companies left the bourse in the last 12 months, which I think would be a record in my understanding of departures from the bourse. And I guess what you just said, John, is indicative of the fact that the way forward is, and what Warwick said earlier about IPOs and capital raise and all that sort of stuff, is that the way forward is to JV with a major, get them to do you get them to fund the exploration stage of your business to get you up the curve earlier than trying to do it yourself. Would that be a fair comment?
Yeah, when I first came to Sydney in the early 80s, a modest size IPO was $2 million. A house costs you $100,000 or $200,000. Companies are still out there trying to do IPOs of 2, 3 or 4 million, but the average house is going to cost you $1 million. That money doesn't go far enough. And because of all the add-on costs, you should delay going public with an IPO as long as possible. If you can get some results from a joint venture or something like that, that's great. It's a more pure way of making money, but a lot of geologists wouldn't have a job if they weren't running their own little companies.
Any other comments from the panel there? That's all good. That's a fascinating look at the exploration funding side of the business. So thank you very much to our panellists. Very much.